We introduced cash outs as reserves, which can be used for investor properties.
We love doing condo hotels, 30% down.
Second liens usually go in line with the first lien.
So you don't need a background in investing. And of course, A&D Mortgage has even exceptions for these types of loans.
Welcome to A&D Digest. I'm your host, Nikita Verindab, and today we have two industry experts joining us. Alex Suslov, Head of Capital Markets, will discuss current market trends impacting the mortgage market. And of course, Mark Glaser, Wholesale Team Leader, will delve into the benefits of investor loans. Mark, Alex, welcome to the studio. Mark, it's been a while since you actually joined us here, so welcome back.
Thank you for having me.
Of course, it's a pleasure having you here. Thank you so much for finding time to join us. I know you're a super busy guy. You made it.
You got to take care of business.
Right.
Clients
Right.
call, you got to answer their calls.
Always. You never miss a call from the client.
Absolutely. You got to make sure to return all calls by 5 o'clock.
Right. Alex, how you doing?
Doing great. It's been some time since we were here with Mark, and it was a great conversation last time. Mark knows what he's doing. His pipeline is great, and he has a lot of great deals.
Right. Mark, do you know why we're here today?
We're here to talk about investor loans with A&D Mortgage.
Absolutely correct. So starting with the investment loans, please tell us a little bit more. What is it? For whom? How?
Okay. So our investor loans pretty much are set up for borrowers who are purchasing 1 to 4 units, as many as 5 to 8 units, condos, and condo hotels. We have a pretty unique program. If you put 30% down, our program will allow you to, it doesn't even have the debt service. It could be a vacant property, and A&D Mortgage will finance you even if your debt service is down to 0, with 30% down on a 70% loan to value. If you put a little less down, 25%, we have a scale, debt service scale. It could be 0.75 to 0.99 with 25% down, but at 20% down, 80% loan to value, generally on single family homes in that nature, it needs to debt service 1 to 1, exact. Our 5 to 8 program requires 30% down, but it needs to debt service at least 1.1 or better. The 1003, no income, no employment, no employer. It's solely based on the debt service of the property. Once again, at 70%, it doesn't have to debt service. It's a great program for condos, condo hotels, where debt service may be a problem or not even having a tenant in the property. We require, for the most part, that the borrower own a primary residence or own a piece of real estate, not necessarily a primary residence. So they could be renting, do a debt service loan as long as they have owned a piece of real estate in the last 24 months.
And doesn't matter where, right? Doesn't matter
Doesn't matter where. Anywhere in the world, if you currently own a piece of real estate and you're currently renting, no exception needed. If you own a piece of property to do this. So you don't need a background in investing. Just owning a piece of real estate could be your primary or such. You could be renting. And of course, A&D Mortgage has even exceptions for these types of loans.
So we basically just covered like the specific requirements and terms. To kind of like wrap up and make it pretty simple. How can borrowers increase their chances of approval?
Increasing your chances of approval, well, the better the credit score, the better the rate. The lower the interest rate. How could they improve? For the most part, investors who want to do this, whether it's the first time or not, they just want to be sure that the property they're buying has the ability to have a renter, to debt service, have the ability to either break even, make a profit, or not break even in the beginning, but as the property increases in value, it gives them an ability to have an invested property and a good asset.
And they can close on an LC, on the borrower too, right? Correct.
A&D Mortgages permits you to, on all investment properties, whether it's a debt service loan, a profit and loss loan, a bank statement loan, you could close at an LLC or corp, but only on investment properties. and we don't even have any extra fees or charges when you close your investor property in an LLC.
Got it.
Just to add to that, also, this is available for foreign nationals as well as U.S. citizens. You can live in another country, come to Florida, come to New York or any other state and buy an investor property. And you can live elsewhere, hire a property management company who would be running your day-to-day operations on the property, and you will basically get those profits to your balance sheet.
So, to his point, a foreign national would want to purchase investment property here as a hedge to their current currency. So you want to put as much as you can in US dollars, so you go buy an investment property. So foreign nationals, if they put 30% down, they could also take advantage of having no debt service, or if it is debt servicing, allow for it. For our foreign national borrowers, we have a RON program, remote notary. So if they come here to purchase an investment loan, a foreign national, they don't have to return. We could do it overseas on their laptop computer and close in the comfort of their home.
So that's for those individuals and the companies trying to expand their investment portfolio, right?
Correct.
Doesn't matter, foreign nationals, U.S. citizens. Is it available for non-permanent residents?
Correct. So we offer these programs for anybody who's a non-perm, CO8, CO9, C10, anybody who has a visa or work permit that allows them to be here and work here, absolutely. But for foreign nationals, they don't need that. They could have a B1, B2 tourist visa from abroad, and we're happy to welcome buy a investment property here in our debt service loan, or some could even do a CPA letter with income, which would give them a better buying power as far as LTVs. And of course, we welcome them, and pretty much they could even, like I said before, close in their country.
Are there any particular types of properties or investment strategies where the loans are particularly beneficial?
So in Florida, New York, across the country, we have condo hotels. It's a great investment, and the DSCR loan from A&D Mortgage allows you, since it doesn't have to debt service in some cases, to be able to do properties such as condo hotels, which give you great revenue depending on the season. So even if there's no tenant in there, and it even doesn't have the debt service right now, but in the future, it's going to make money for you. We love doing condo hotels, 30% down. A&D also offers 5 to 8 units. So if condo hotels are not in your bag, perhaps you want to do a 4-plex, 5-plex, 8 units to increase your portfolio and increase your ability to make a living from that. And it has the ability to increase in value over time. So you become a good property owner, and A&D Mortgage has the debt service loans for those. But we also have profit and loss to make your rate better. We also have bank statement loans. You could use all of these on your investor property purchases.
Also, Mark, have you closed any loans with the e-closing, with the e-note yet?
Currently, my group hasn't. I haven't seen that.
So it's
Maybe I
mostly
wouldn't even know.
RONs that's popular.
Right. RON is the most popular for if you're not here. We give the ability to a borrower to literally close on their kitchen table on a laptop. And they just need to send the note back to us signed, and you're done. Inside the system, the RON system on the computer, you are e-signing, like DocuSign, and you're able to close with that, and they're notarizing it online. And then just the note comes back to us for funding.
That's actually going to be a pretty good topic for the next episode, I'm pretty sure. The last question for you, Mark.
Sure.
How, in your personal opinion, how do you think A&D Mortgage adjusts to the market trends right now, especially with the rates, and how it will benefit the investors?
So the most important thing to remember is program. Rates currently are not the most necessary item, but the program to get the borrower into the property that they've always wanted to be or the property that they need to be in or want to be in. So the program will allow a borrower, again, like the debt service loan, since it doesn't have to debt service, the rate could be a little elevated, but still able to get them into the property that they wish. And then at some point, as rents go up, they will be even more profitable than they are now, maybe not as much, but you've got the property, you got the real estate that you wished. So we provide the program for that. Program was, once again, investment. You could do a profit and loss to get your rate better. And once again, you could pivot to that where if you believe your income is there through a profit and loss, if you're self-employed, then you're going to be able to get this loan with a lower rate and once again, be in the property. Even though rates are on the rise, you could get in a moderate rate to get you into your property.
Mark, thank you so much. That was pretty clear. Alex, what I've heard, we have changes in the guidelines, right?
We did a few updates to make our guidelines more accommodative. We introduced cash outs as reserves, which can be used for investor properties, which can be used for owner-occupied properties. And the idea is that the cash out part that you're getting from your property that you already own would count towards the reserve requirement for a mortgage transaction.
You basically just answered my second question. I was about to ask the cash out for reserves. Do we have any updates on the second lien guidelines? Are we waiting for something maybe?
Second liens usually go in line with the first lien because it's a non-QM product and all those small details and requirements are matched as far as the reserves, as far as the methods of the verification of employment, income methods, so on and so forth. The main differences on second liens is, by the way, we were just talking with Mark, is the requirement for a title policy. If you're under 250,000 loan amount, you can go with the limited title or encumbrance and owners and encumbrance report, which is technically a title search insured by an insurance company, but it's a faster and a less expensive method of running a title policy, basically.
I'm also
the ability, to what Alex said, to do a second lien with bank statements, to do a second lien with a profit and loss, to do a second lien on investor properties with debt service. Most second liens out in the community are income, like full income, tax return basis. But to Alex's point, non-QM are P&L, bank statements, debt service, a better ability to qualify to get your cash out now. So A&D Mortgage offers you the ability to price a loan on our system without even logging in. Going to my website and saying, okay, I want to check out a debt service loan. Our quick pricer is available to you, admortgage.com. Click quick pricer, and whether it's midnight, 2, 3 in the morning, whether you're up late or up early, you could price our loans on quick pricer. It'll allow you to price it on Super Prime, our great standard program, debt service loans, for nationals, conventional lending. It gives you the ability to know upfront before meeting with a client what your pricing is going to be and have the ability to, when you meet with the client, to give them a rate at that time. It's a great device, a great tool at A&D Mortgage's website.
Mark, Alex, I have no more questions, unfortunately, for today. You explained everything pretty straightforward. Everything was super clear. Thank you so much. Mark, thank you so much for making it happen. Thank you for joining us today. It's been a pleasure having you here. I hope I'm going to see you next time too.
Thank you for having me. Alex, good to see you. And good to see you all. We look forward to your loans, everybody.
Thank you, guys.
Thank you for tuning in to this edition of A&D Digest. I hope you enjoyed our insightful conversation with Alex Suslov and Mike Glaser. Their expertise have given us unique perspective on the current market trends and advantages of the investor loans. If you found this discussion valuable, don't forget to hit the like button and subscribe to our YouTube channel for more exclusive content. Stay informed and stay ahead in the ever-evolving world of mortgages and investments. Once again, I'm Nikita Verendap, your host, signing off. Until next time, take care and make smart investment choices.